Reach based on the information that you're receiving from the people that use Trulia, but Zillow now. What is the best housing market in terms of price appreciation, and what's the worst market if you're looking for a bargain?
Well, it's really a very local market now. I'm glad you asked that question, because just as there's no national weather forecast, there's no national housing forecast. So places like the Bay Area continue to just be off the charts, partly driven by the tech innovation that we've been talking about with Apple and other startups. San Francisco home values are still increasing 10 to 15% year over year. Same with Denver, same with San Jose. So places with very strong local job growth. The rest of the country, though, especially most of the Midwest, it's not as pretty. In fact, in July, Zillow data saw the first down month over month home values nationwide that we've seen in a couple of years. So housing and real estate is generally slowing, with a couple pockets of strength, especially in the Bay Area.
The Fed Chair Janet Yellen, she has said in the past that one of the things that keeps her up at night is the state of the U.S. housing market. How would you describe where we are, and how will a rise in interest rates, I'm probably answering my own question, but how will a rise in interest rates affect the U.S. housing market?
I don't think Professor Yellen needs to worry about the impact of rising interest rates on and rising mortgage rates on housing. There's lots of other things to worry about it, but generally speaking, housing now is on its own footing. It's getting a little boring, which is good. Nationwide home values are up around 3% year over year, which is boring, and that's good, that's stable, that's calm. Rising interest rates will increasing the Fed funds rate and going up will increase mortgage rates, which will not significantly impact housing.
Why do you say that?
Because mortgage rates have been so low for so long, and even after an uptick, they'll still be so historically low that our data and our economists just don't think it will have a significant impact. So I'm not that worried about the impact of rising mortgage rates on housing.
You paid $2.5 billion for Trulia. When's that going to pay for itself?
Well, it's already paying for itself with the combination of our ad products. So it was an all-stock deal. We issued a third of our shares to Trulia, so it was a two-third, one-third all-stock deal. And the combined audience scale between these two brands now allows us to be very, very well positioned for this migration of ad budgets, real estate agent ad budgets, out of newspapers onto the internet. So Zillow Group is by far the best place.
And the move to mobile as opposed to just desktop?
Absolutely. We have even more market share on mobile than on desktop. About 2/3 of our usage is now on a smartphone or tablet. So that's where the real estate shopper is. We've seen time and again that advertisers follow audience, whether it's onto YouTube or Instagram or Facebook or now onto Zillow Group. Eventually, ad dollars move to where the audience is. We have the audience. That's why ad budgets are migrating.
Spencer, 2015 has been a peak year for mergers and acquisitions. Are we at a peak now?
I don't think we're at a peak, but I will say that the volatility over the last just couple weeks and couple months, it does scare executives. It scares CEOs. It scares boards. They become less confident.
Does it scare you?
A little bit, yeah. There's no question that it causes us to really think about how much cash do we want to have on hand, what might happen to the economy, and that sort of clenching up hurts M&A. Now, the countervail to this is tech companies have so much cash on their balance sheets that that's what's driving a lot of M&A. So even though perhaps we're reluctant to issue shares at these prices, a lot of companies, including Zillow Group, have a lot of cash.
Spencer, just quickly before you go, the reverberations from China, from the devaluation of the currency, what's going on there, the slowing growth, is that a headwind that could affect the U.S. economy, specifically the housing market?
I do not think the challenges in China will affect the U.S. housing market. Chinese buyers are really only impacting very high-end homes in New York and in the Bay Area. They're not buying $100,000 condos in Cincinnati. So the U.S. economy, or I should say the U.S. housing market, won't be affected by the challenges in China.
Zillow going to be in Chinese soon?
Well, we already power Leju, which is the top real estate site in China.
How about your own?
We haven't gone there yet. We got a lot of work to do here in the U.S. So
Thank you very much. Spencer Rascoff, he's the co-founder and the chief executive of Zillow Group.
And still ahead on the Bloomberg Market Day, more details out of Apple's big developers conference. We're live in San Francisco when Bloomberg Market Day continues in just a moment.